The macro data that we got earlier this evening is pointing at retail inflation for June rising. Now it's come in at 4.81%, which means it's clearly much higher than 4.3% that we reported in May. This rise in inflation primarily on account of higher food prices. So far, retail inflation remains within the tolerance band of the RBI. But meanwhile, we've seen these IIP numbers as well, industrial production numbers for the month of May. That number has come in at 5.2%. It is higher than 4.2% that was reported in the month of April. So let's understand these numbers. And for that, senior economist Upasana Bharadwaj, who is part of Kotak Mahindra Bank, is joining us. Upasana, good evening. Clearly, we don't have the favorable base effect. And now these vegetable prices have been on the rise. I mean, look at how much our tomatoes cost. So in your opinion, from an economist standpoint, what was the greatest contributing factor for the rise in inflation this time? Did it actually rise much higher than your own estimates?
Yes, absolutely. We were expecting the headline inflation to be 4.64%. So clearly it has overshot that percentage. And largely the difference is led by the food inflation category. If we were to just look at the food inflation breakup, it is quite a broad-based increase in food inflation on a month-on-month basis. It has been led by eggs. It has been led by cereals. It has been led by vegetables, of course. I mean, we have talked enough about the tomato prices, but it's not just tomato prices. There is a reasonable near double-digit month-on-month increase in potato prices, onion prices as well. But having said that, these are the perishable items which are very seasonal, movements that we are seeing in this category. Largely every year during the monsoons, either because of deficiencies or because of excessive rains, we tend to see these kind of disruptions happening, and which tend to cause supply shocks. So I think on the vegetable prices, we will see moderation going ahead. In fact, for tomato prices, we've already seen some kind of supply side intervention, which the central government has provided for across various states. Because of the excessive floods or because of issues associated with either production or supply or distribution. So they have been providing some kind of benefits out there. Clearly, so vegetable prices I expect in the near term clearly would be continuing to be on the upside. But I think beyond a month or two, we should start seeing the moderation in vegetable prices also subsequently happen. The bigger point of worry is on other factors and how eventually rains will pan out, and whether we will see any kind of sustained up move that is happening on the rice prices and also on the pulses. I'm going to be watching these two categories much more closely to see whether it has any sustainable impact or upside impact on inflation.
Industrial production has risen by 5.2% if you consider it year on year. How much is that going to help our economy now? Do you think that's something that will see further rises now that you're seeing that kind of upward momentum in power generation as well, which was in negative territory? It's moved up to 0.9%, and the big is manufacturing. So will that continue and help the economy?
Absolutely. I think, the IIP numbers have been good. We were expecting 5%. It's even better than that. So it's clearly a good sign that the state of the economy is looking robust, resilient for now. One thing important to keep in mind is that the global slowdown, which was really expected to hit the overall global economy, has been postponed to an extent. I think that is also supporting a lot domestic economy as well. The manufacturing sector is supported. In fact, if we look at the breakup of consumer durable category, we've seen the first positive growth after quite a few months. So the overall urban-rural demand is holding up well. Global demand is not slowing as much as what we were anticipating earlier. All of this is fairly conducive for a resilient economy. And also overall, the first quarter of this financial year has a reasonable base effect, and that too will keep the GDP growth of the first quarter also reasonably strong. We'll have to wait and watch for how eventually the global situation pans out, and how the fading pent-up demand domestically also pans out, to give us a clearer picture on whether we'll be able to sustain these kind of numbers going ahead.